You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 26th of February, 2018. We see stocks up for the day along with bonds. Gold is down. First, let's jump into the S&P 500. We ended the week up pretty big on Friday, 1.57%. Our price percent oscillator still down, derivative oscillator still gaining downward momentum. We ended the week with a green up candle, not quite a spinning top, I would not call it. It is a small green up candle after we had a solid green up candle the prior week. Where did the price movement end? Right about where it ended in the prior week, according to our Heikin Ashi candlesticks. Now remember, Heikin Ashi means average pace in Japanese. Great training, like 64,000 people have taken it. You can find it at our chartingwealth.com website or at our YouTube channel, but it's Heikin Ashi, H-E-I-K-E-N-A-S-H-I, means average pace in Japanese. It's the kind of candlesticks we like because they're easy to follow and very accurate. So we basically see things sliding sideways on the weekly chart. As we go from the weekly to the two-day, what do we see happening? Still don't have a crossover going up. Why? Because things are sliding sideways. We saw things top out in the market on the 16th, the two-day candle ending on Friday the 16th. That was last Friday. Then what did we see happen throughout the course of the week? Ending on Wednesday, remember it was a shortened week because of President's Day. We actually had the candles on Wednesday is a red up candle. Again, not when we say red up candle, red open box candle, not a strong down candle, and had a wick on top, followed by a green candle that ended the week. And all the price movement is actually below where things topped on the prior Friday. So again, we do see the price percent oscillator moving up toward the red signal line. It has not crossed yet. We see the derivative oscillator losing energy. Now we look at the 4-hour chart. What do we see? We were primed after this big sideways slide to jump in case there was a crossover going down. When we see how things worked in the morning, we saw actually the derivative oscillator go negative. But then in the afternoon, things popped up. And as far as popping up, when we look again all the way back to Friday the 16th, price movement still not above that. So we have a weak market sliding sideways. Yes, it was a nice up day on Friday, but that doesn't obviate where the average pace is. So again, it was like these huge down moves kicked the foundations out of about half the market, scared a lot of people. Look at also what's happening with our 50-period moving average. It is acting like a ceiling as far as price movement goes, tapping up on it. If we do see a push through that, then that, of course, we would expect would show higher highs, but it may very well act like a ceiling in resistance and things will pop below it. So we'll continue to keep an eye on things as they develop. Move a little bit quicker through the Qs. We see some similar things, except the Qs was up even more, 2%. Again, remember the Qs is the NASDAQ 100. The tech stocks getting much closer to a crossover going up on the weekly chart. Has not happened yet, but sure appears to be getting close to that. We have a big green up candle with a wick on top, no wick on the bottom. Price movement is getting very close to where we saw that prior week moving down. So the Qs does appear to be recovering much quicker than the NASDAQ 100. Derivative oscillator still in the negative there. As we look at the two-day chart, what do we see? We can see things backtracking. Still don't have a crossover going up yet on the weekly or the two-day, but does appear to be getting much, much closer. We'll see how the new week starts for the NASDAQ 100. 4-hour chart, we saw this sideways slide, and then of course in the afternoon that bump up really moved things higher. The derivative oscillator actually gained some energy. Price percent oscillator moved up. That's where we are on stocks. Trying that, again, S&P 500 sliding sideways, Qs trying its best to regain its upward momentum after the crossover's going down. Still don't have a weekly vertical crossover. Okay, next, let's go to the weekly chart. Look at TLT again. Since we had that weekly vertical crossover going down back on the 5th of January, we're into our 1, 2, 3, 4, 5, 6, 7th week of strong down moves. So again, price movement still well below the weekly trend line, still below the 2-day trend line on that weekly chart as we go, and derivative oscillator still heading down strongly, price percent oscillator down. What do we see happening on the 2-day chart? Saw some price up movement, 0.89% for the day on Friday. Derivative oscillator is losing its downward momentum. Price percent oscillator is gone flat, actually moving up a little bit toward the red signal line, but we actually got a lower low there on the 21st, and again, things moving up for this latest 2-day candle. So keep your eye on things as we dig into the 4-hour chart. We can see a little more. We had things laminated, if you recall, as we talked about things yesterday for the Friday broadcast. And what happened? Things bounded off that, shot up in the morning, stronger in the afternoon. Price movement sitting right there on the 2-day trend line. So keep your eye on the prize. You have done very, very well if you jumped into this original trade around the 125 marker. So all the way down to the lowest low of 116.51. That was just been beautiful. Don't lose what you've gained. Just sort of keep an eye, particularly on that 2-day trend line. And you do have a strong crossover going up on the 4-hour chart. As we said, if you get a confirmed crossover going down, which did not happen, you could have jumped in. So if you had already gotten out and pulled the plug, you'd still be staying out and not losing. So that's where we are. We're going to go back to the weekly. Look at our last chart. What do we see going on with gold? Gold is still in a confirmed up move on the weekly chart, but we see the derivative oscillator losing energy, price percent oscillator headed down. What gold's really done over the last 3 weeks is slide sideways. We ended the week with pretty much a doji, which means, again, lots of indecision tending down. And of course, things were down for the day on Friday, but just 0.13%. As we look at that 2-day chart, what do we see? We see on the 2-day chart, remember, it is a confirmed down move all the way back on the 7th, ticked over even further down. Again, after 4 days of up movement, now we have 4 days, two 2-day candles of down movement. 4-hour chart we're going to jump into in just 1 minute, but the 2-day chart is down. The weekly chart is up. When you have schizophrenia like that, we are not trading on gold at this point unless you're back to trusting that 4-hour chart. Of course, we saw some strong down movement, but gold has really been sliding sideways since it hammered down in, well, over 2 days from the 20th through the 21st, and then on the 22nd and the 23rd, that's Thursday and Friday, it's really just slidden sideways. So again, keep your eye on gold. We really want to see nice, strong movement up and down so that we can start counting again on our 4-hour chart, and it is not letting us do that just yet. So again, watch as we go into the new week. What's happening with stocks? Are stocks going to keep recovering, or are they just stalling, particularly the S&P 500, to roll down? Keep your eye on TLT if you're still in that down move, watching very carefully if you're going to have a bounding up and lose some of that profit you've already made in your virtual trade. Be careful there. Gold, still waiting for things to settle out to just see which way it's going to go strongly. That's where we are, folks. Thanks so much for being with us this whole week, and hope you'll stay with us over the course of the new week, and we'll see just how things go in these markets as we say goodbye to February and midweek and jump into March. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.